Hi there, welcome to Neppy Invest. One question for you before I start this video. What is the similarities between wholesaling adult products and mining, exploring and evaluation? Well, I'll get to answer that question in this video today because I'll be looking at 4 companies that did achieve an operational cash flow positive June quarter. And one of these companies is perhaps the oddest, strangest company on the ASX in terms of what they do or their principal activities. Another one of these companies has a market cap of $1 billion. This is a successful company, and they've recently gone into production, gold production, and more than likely they won't have to do many more quarterly reports because they are highly operational cash flow positive. Another company that rents diesel-driven pumping and power generation equipment. And the last company we'll be looking at today was inspired perhaps by Wizard of Oz or Elton John. But the first company we'll be looking at today is perhaps that weirdest company on the ASX, particularly what their principal activities are. And that company is Delecta. I knew nothing about Delecta before I started a little bit of research for this video, and I found what this company does really odd. And Delecta has 2 subsidiaries. The first subsidiary is Calvista Australia Pty Limited. And that's all about the wholesale distribution of adult products. Yes, distributing adult products. And the other subsidiary of Delecta is Silver Queen Mining. And Silver Queen Mining is all about mining exploration and evaluation. Yes, Delecta seems like they fund their mining exploration and evaluation by selling or wholesaling adult products. I find that a very weird combination. Doesn't seem to be working for Delecta right now because the market cap of the company is $6 million, and that wholesale distribution of adult products doesn't seem to be highly profitable. So let's have a look at their June quarter report to see how the business is going. Delecta's ticker code is DLC and a market cap of only $6 million. And when we look at the financial year 21 cash receipts and operating cash flow, and even the quarter results, nothing to get too excited here. Even though they do have cash receipts of $19.3 million through the wholesaling of their adult products, it doesn't seem like there's a lot of margins in it because the operating cash flow for the financial year was only $400,000 and for the quarter was only $125,000. And they are spending money through Silver Queen Mining, exploring and evaluation. Not a lot of money doing that. And because they're not spending a lot of money doing exploring and evaluation, cash on hand in the business fell from 1.9 million to 1.8 million. So the market is not that excited about Delecta and hasn't been that excited about Delecta for a few years. And there's one reason why, and we'll have a look at that reason why in the next slide. As we look at Delecta's receipts history going back to September quarter 2013, nothing at all to get excited about Delecta. Doesn't seem like their wholesaling of their adult products is all that successful at growing because, in fact, if you do calculate any sort of growth rate with their receipts, potentially it's going backwards. Back in September quarter 2013, $5.5 million of receipts, and the most recent quarter, 4.1, which was the second worst quarter out of the past 8 years. The worst quarter was the June quarter 2019. Perhaps the June quarter is always the quietest quarter for selling of adult products. I don't know. But the main thing with Delecta is their adult products division subsidiary is not really growing. So they do have to rely on their mines, and potentially one of the mines can be successful. Maybe they can find something, and that's how they grow in the future. So the way to look at Delecta, if you are interested, is you'd have to probably judge or look at their mining assets and see if there is any potential there. As we look at the weekly chart for Delecta, nothing to get too excited. However, you could argue with me right now that the share price is towards the bottom of its range. So Delecta trades between about 0.4 cents and in the 2.5 to 3 cent range. And right now it is at the bottom of that range, around 0.6 cents. We have seen a fair bit of an increase in volume since the COVID-19 financial panic. That could be just a symptom, or not a symptom, but just a an artifact of the increase in interest in investing on the equity markets after the COVID-19 financial panic. But because they are potentially at the bottom of the range, there could be a bit of upside as the share price might swing up over the next few years. And if the share price does move towards 2.53 cents, that would be the time to get out. So that's the only way you might think about trading this, unless you have a look at their mining assets and you find something interesting there. Next company I want to touch upon is Gold Road Resources, ticker code GOR. Significantly different company than Delecta, mostly in terms of quality. This would be a high quality company. The main reason I've included this company in the group video is I just don't believe this belongs here, and more than likely they won't have to issue any more quarterly cash flow reports because this company is highly cash flow positive. It's only recently gone into production. That's why it's still issuing these quarterly cash flow reports. And as I mentioned just a second ago, more than likely, this could be the last or second or even third last cash flow report we get from this company. Market cap 1.1 billion. So the market has seen the potential in this company over the past 4 years, and we'll be able to see that with the share price action during that time period. Highly cash flow positive, operational cash flow positive, $46.3 million for the financial year on cash receipts of $134 million, and they finished the quarter with $124.4 million. And one of the reasons it did fall from $141 million is because they spent $13.7 million on capital expenditure, and they paid their inaugural dividend, which amounted to $13.2 million. This is just the financial history of Gold Road Resources, looking at revenue and operating cash flow. 3/2 of revenue and operating cash flow because they've recently got into production. And we've seen that revenue rise, and this company is highly operational cash flow positive during those 3/2. And that's why their market has been excited about this company over the past 4 or 5 years. And that's why they've paid a dividend, their inaugural dividend, because they are highly operational cash flow positive. This is a good quality company. As we look at the Gold Road Resources weekly chart since 2014, a nice uptrend, particularly from the start of this period in 2014 when the share price was about 10 cents to the peak in the share price in August of 2020 when it got to $2. So nice returns for shareholders who maintained a holding during that period. The share price has been a little bit more volatile over the past few years, and we have seen the share price pull back to $1.29 or $1.30. And the main reason for that is because of the gold prices themselves. So we're going to see Gold Road Resources share price mirror gold prices a little bit more than it has over the past 8 years or so. Third company I want to discuss is Babylon Pump and Power. This seems to be more like a mining services company because they rent diesel-driven pumping and power generation equipment, mostly to mining companies. Ticker code of Babylon is BPP. Market cap of only $20 million. And when you look at the cash receipts, $20 million for financial year 21, but they were operational cash flow negative by quite a bit, $5.8 million for the financial year. That seemed like they have turned that around in the June quarter. And one of the reasons they did turn around is because receipts did grow quite a bit from the previous March quarter and were at $7.6 million for the June quarter. Even though receipts are quite higher than the previous quarter, they do spend a lot of money on product manufacturing and operating costs, $4.5 million, and staff costs, $1.8 million. And because they do spend a lot of money, they were only operational cash flow positive by $155,000. They did have a little bit of debt, but they did repay $3.4 million of debt. And one of the ways they did repay that debt was through a capital raising of $2.2 million. Now, because the capital raising was a little bit less than the repayment of the debt, the cash on hand in the business fell from 2.3 to 1.0 million. So looking at the June quarter results and some of these financial numbers for the financial year 21, nothing to get too excited about this company in isolation, but let's have a look at the receipts history for this company. Maybe we can garner a little bit more excitement by looking at that graph or that, what do you call it? Graph? Chart. We'll call it chart. I do get a little bit more interested in Babylon when we look at the receipts history for this company going back to December quarter 2017. because we generally see an upwards trend in receipts, particularly from that first quarter when they only had $3,000 in receipts to the June quarter 2020 when they received 7.4 million. But then we saw receipts come back for a few quarters, dropping from 7.4 million to 2.8 million in the March quarter 21. Then they've rebounded quite quickly in the June quarter, and it actually was, the June quarter, a record high for this company, but they're barely operational cash flow positive. Probably want to wait for the next few quarters to see how the company is doing, because this could be just a little bit of a blip. Maybe we'll see receipts going backwards again. So the market's not that interested in this company. I'm not that interested, but I'll keep an eye on Babylon next few quarters just to see how receipts are going. As we turn our attention to Babylon's weekly chart, going back to when they listed on the ASX in 2017, nothing too exciting happening here at all, apart from one little thing, which I'll touch upon in a second. We did see a little bit of excitement in the market in this company from when the share price reached a bottom during the COVID-19 financial panic, and that bottom of the share price was about 1.3 cents. And then we saw the share price rise from that bottom of 1.3 cents to a high of 3.8 cents towards the end of 2020. So that's a nice little rise in the share price. That did coincide with that favorable June quarter results for the company. However, since that favorable June quarter results, we have seen 3 quarters of receipts going backwards, and that does coincide with the share price dropping from that high of 3.8 cents to a current share price of about 1.5 cents. And we haven't seen a share price this low for this company in the past, apart from around the time of the COVID-19 financial panic. So if you are excited about this company, maybe now is the time to buy into Babylon Pump and Power, simply because of where the share price is and where the share price has the potential to rise if the next few quarters are quite favorable. Final company I want to touch upon today is Yellow Brick Road. I'm not sure if this company's name was inspired by Wizard of Oz or maybe Elton John's song. What's that song called? Goodbye Yellow Brick Road. This is Yellow Brick Road Wealth Management. What do they do? Some sort of financial services, particularly mortgage broking, aggregation, and management services. There you are. A few months ago, I was running in Stafford, and I saw a Yellow Brick Road store. It's the first time I've seen a Yellow Brick Road store, a very small store in a group of about 5 shops. So that's the first time I've seen this store, and that's the only reason I know this company really exists, apart from the cash receipts have really done nothing over the past 5 years. We do see a lot of cash coming into this business. However, the margins must be so low that even though they did produce $204 million in cash receipts, they were only operational cash flow positive by $1 million. So with those low margins, I'm not sure why you'd be excited about Yellow Brick Road, and maybe that's why the market cap of this company is only $29 million. They do have $12.5 million of cash and $3 million of debt, so that gives it Yellow Brick Road an enterprise value of about $20 million. And you just see the June quarter receipts, $56.5 million, and they were operational cash flow positive in the one quarter by $1 million. If they can continue being operational cash flow positive by $1 million or even higher over the next few quarters, maybe I'd get a little bit more excited about this company, and maybe the market will as well. Now let's have a look at the cash receipts history, because I have been tracking the cash receipts for Yellow Brick Road over the past, I think it's about 7 or 8 years. As we delve into the receipts history for Yellow Brick Road, going back to the June quarter 2013, so 8 years of history here, we did see a rapid rise in receipts back in 2014 and 15. Could be many reasons for that, maybe an acquisition, because we saw receipts rise from $7.1 million in the June quarter 2014 to $47.2 million in the September quarter 2015. But from that September quarter 2015 to the March quarter 2021, receipts have really just gone sideways, stuck between 45 and 50 million until the June quarter we've just seen gone past, where receipts have just grown to 56.5 million. This does lead to numerous questions about Yellow Brick Road moving forward. Is this growth in receipts over the past quarter, is that just a one-off, or is that a new uptrend in receipts? And if it is a new uptrend in receipts, and if margins have increased by a little bit, maybe this company being operational cash flow positive in the one quarter by 1 million is a start of a new exciting period for this company. And if that is true, then enterprise value of only $20 million for this company would be very good value. But there is a lot of questions there to be answered by Yellow Brick Road over the next few quarters. So I will pay a little bit of interest to how Yellow Brick Road does in the September quarter and the December quarter for this financial year. When we look at the weekly chart for Yellow Brick Road going back to 2014, not a happy looking chart. The share price back in 2014 was around about 75 cents. And then we saw the share price of Yellow Brick Road go into a long, very long term downtrend, falling from that high of 75 cents to a low of around 5 cents during the COVID-19 financial panic. But the share price has been consolidating for about, I would say, almost a 2-year period around that 7 to 10 cents range. And we have seen the long-term moving average, which is the 50-week moving average, come together with the other two moving averages. The share price is going sideways, the moving average is going sideways. So the share price of Yellow Brick Road has found a potential floor. And the next step would be finding some sort of breakout in the share price to the upside, coinciding with some good financial data from this company. And until we get that from Yellow Brick Road, no reason to buy into this company just yet, because it can go numerous ways. The share price could fall if these receipts from this company start to drop. The company is no longer operational cash flow positive. So many scenarios at play for Yellow Brick Road. And the one thing you'd be waiting for here is a breakout to the share price. The other thing we have seen over the past year has been a decrease in volume. So the market is becoming actually less interested in Yellow Brick Road. So even though the share price is going sideways, not a lot of interest in this company just yet. I'd like to see a rise in volume on good positive financial news and then a breakout in the share price. They could all coincide together, but that's what I'll be looking for in this company moving forward. That is all I have for this June quarterly report group video featuring Delecta, Yellow Brick Road, Babylon Pump and Power, and Gold Road Resources, which is by far the best quality company in this list. If you do have any questions about any of these companies featured in this video, leave a comment. Or if you know a little bit more about these companies, if you love the fact that Delecta is a wholesale adult product company, leave a comment. Talk about why you think that company could be successful in the long term. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.